Good day, everyone. This is Patrick from EasyFX Code Training System, and this is Saturday, the 18th of December, 2021. And this is the weekly technical analysis for the euro, the cable, and the Aussie dollar for the fourth week of December. And this is likely the last weekly analysis video for the year, since next Saturday is already Christmas. So I'll likely take a break, but I may drop a video just to go through some case studies and analysis of how I analyze on the smaller time frame on the 4-hour and 1 hour. So do watch out for that. And let's begin with the euro, with a very busy week for the central banks, including the ECB. And let's just take a look at the for the week. It basically just stayed in the same range as the last couple of weeks and it attempted to break out, but failed to do so. The ECB met on Thursday, and that was a bullish day and bullish close, where they did announce their slowdown of their PEPP program and announced they will complete the program by the end of March next year. So they've already starting the tapering earlier. And prior to that, on the Wednesday or late Wednesday, there was the FOMC meeting, and they have also pulled in their QE program and tapering to end by February of next year, even earlier than expected, supposed to be by May, end of May. So which supposed to be hawkish and bullish, but although it did try to, the US dollar did try to climb up higher, it pulled back, and at the same time, the euro and all the major pairs dipped lower into support and bounced right through until the ECB meeting and closed bullish on the Thursday, but then on Friday gave everything back and turned quite bearish. And you will see on the US dollar index where it has recovered and bounced back up. So that was a fall on Friday of almost 100 pips, back down near the lows of the range. Still above the 112 and the key support below that. So the bullish mode for bullish sentiment for the euro didn't last too long and still stayed below the monthly pivot and closed well below the weekly pivot for last week, which was right at the 113.00 round figure level. And if we take a quick look at the weekly time frame, after quite a number of spinning tops and small bodies, almost dojis, there was a definitive close, bearish close, and likely leading to further moves lower to the support level down to the 111.70 to the 41 zone. Let's go back to the daily time frame. And let's take a quick look at the 4-hour time frame as well, where you see this was the This was the FOMC announcement where the dollar jumped up initially, but then retraced lower. So the euro dipped into this support level of this swing low, previous week swing low, and bounced with a very bullish hammer, and continued the next day right through to the ECB meeting, but then again got blocked by the previous highs of a couple of weeks ago. And finally on Friday, it gave it back with right back down to almost the lows for the last 3 weeks. So that's a very bearish close here, and which leaves it exposed to further bearish momentum to hit this support zone between the 111.41 to the 111.70 zone. Okay, this is a 111.68, let's call it. On the day time frame, it's probably have to go back to the weekly, and it's all the way back to from May of last year. That was the swing low area. Okay, let's take a look at the US dollar index. Where it did try to spike higher initially with the hawkish FOMC statement, but blocked at the high here of the previous month at the high of 96.87. And then we traced lower, but then found support right into this lower trend line here. And this has climbed outside of this box now. And let's remove this zone as well. So it has managed to recover on the Friday at the expense of the other major pairs and had a strong bullish bounce. And next week, attempting to test this recent high and perhaps try to reach the 200 pip extension at 97.15. Okay, so we'll see next week how the US dollar performs in a shortened week as well of just 4 days. Or perhaps even less. Practically it's just 3 days of full trading. All right, let's move on to the cable, where the Bank of England had their announcement and a statement just 45 minutes before the ECB on the Thursday, and it was already climbing up throughout the day, and it did push up higher, did give back somewhat by the end of the day with this upper wick. And on Friday as well, it gave quite a bit back, although it didn't run all the way down to the lows, so back down to the weekly pivot of last week at 132.38. Although it's still a bearish engulfing candle for Friday. So this zone here at the 133 will still remain as a resistance zone. The upper zone is still intact with the monthly pivot. So it only managed to climb up to test the recent wicks here, recent upper wicks up here. Up to a high of 133.74 before giving back the gains. So similar to the ECB on the Wednesday, late Wednesday, the pound dipped lower initially and then bounced back up and continued to rally till the Thursday. If we go down to the 4-hour time frame, you'll see that after bouncing and climbing up, it was blocked by the 4-hour 200 EMA, eventually blocked by that, and started to pull back, find support at the 133 level, until eventually it gave way on the Friday. It's on the 4-hour time frame here. All right, this coming week, there wasn't any key news for the Eurozone, but for the UK, there's only one minor news. That's the final GDP on Wednesday. So like all likelihood, the support is still going to be at this 162 fib extension. Initially, there's going to be some support at the 132.00, but now it's does seem that it may give way because of this bearish engulfing on Friday. But it's likely to find support at the 131.51 area or even higher above that, with all these wicks indicating support. Let's also draw this here, this trend line. Right, so on the weekly time frame, it closed as almost a doji with a long upper wick. So yeah, it could be indicating further consolidation towards the end of the year. We may attempt to test the this lower trend line next week, and probably likely to consolidate after that. Okay, let's move on to, oh yeah, so the Bank of England did surprise everyone by increasing their rates, which was expected the previous meeting, and they didn't do that. So this time they did raise rates from 0.1 to 0.25%, which means next meeting in February, they may not increase rates so soon, because now there's the Omicron variant that's spreading, especially in the UK. So depending how severe the cases are, so it may hinder the progress, and could potentially be some lockdowns as well. So we shall see what the impact is. Right, so yes, so Bank of England is the only major central bank that has increased rates during this pandemic period. ECB is holding off, so is the Federal Reserve and Bank of Japan as well. So it's also the other banks like Bank of Canada did raise rates. And so we'll see the next round, how the rest of the central banks react. Perhaps the Reserve Bank of Australia, RBA, may consider doing that as well, depending on the impact of the Omicron variant as well. All right, let's move on to the RBA, and they will be releasing their monetary policy meeting minutes on Monday. And similar to the other major currencies, Aussie did bounce up on the Wednesday, and on the Thursday it attempted to test this previous swing low right across from October, but fell short and pulled back, and Friday as well gave away most of the gains. Back towards the weekly pivot of last week, 71.18. And if we look at so it could not reach the monthly pivot as well. So that's still a very strong resistance zone up here. Support is still at the 138 fib extension. This reversal move. And near-term resistance is still holding at the 0.72 round figure. Okay, let's take a look at the weekly time frame. And it's a spinning top, not as wide as the cable. And it's on the upper half of this previous bullish candle. So it's still a possible consolidation for next week. Back to the daily and the 4-hour time frame. So this was the spike through and bounce off after the FOMC meeting, climb up and punch through the 200 EMA, but blocked by that previous swing low, and then return to the weekly pivot. All right, let's move back to the daily time frame. So not too many economic news for next week, since it's already heading into the holiday season and coming up to the last 2 weeks of the year. So do have a safe and happy holiday season, holiday celebration, and have a good trading week in the next couple of weeks. And I'll catch up with you all in the new year for the start of the first week of next year, and we'll likely see consolidation for the next couple of weeks. So do have a good trading week for the rest of the year. All right, take care and stay safe. Cheers for now.